Wow, today was all about a massive, headline-driven relief rally. The geopolitical pressure valve was just temporarily released, and it sent shockwaves through the market. So let's break down exactly who won, who lost, and what it all means for your money.
So you saw the whole market just surge, snapping a really brutal losing streak. The S&P, the Dow, the Nasdaq, they all just ripped higher. And the catalyst? Well, it was pure fog of war chaos. President Trump announced a 5-day delay on military strikes against Iran. And even though Iranian state media immediately kind of pushed back on that, just the hint of de-escalation was enough to send buyers rushing back into stocks.
Okay, so who was the biggest winner from all this news? Let's start with the most direct play you could make, the relief valve for the entire market. We're talking about a consumer travel name that absolutely exploded higher. And that would be Norwegian Cruise Line. Just look at that move. It surged an absolutely stunning 7.92%, making it one of the best performers of the entire day. Now, this wasn't a small move. This was a violent squeeze.
And to really get why this happened, you just got to remember what Norwegian actually does. I mean, they're a massive cruise operator. Their business basically lives and dies by two big things. Are people willing to travel, and what's the cost of fuel to power those giant ships?
Okay, this is where it gets really interesting, right? This is pure cause and effect. Cruise lines like Norwegian have been getting absolutely hammered by the threat of skyrocketing oil prices. Think about it. Fuel is a huge chunk of their costs, somewhere between 10 and 15% of their operating expenses. So the second that strike was delayed and crude oil prices just plummeted, that massive risk premium, poof, it just vanished. And this wasn't investors just dipping a toe back in. This was a violent rotation of cash into these beaten-down travel stocks, everyone hunting for that rebound.
All right, so let's flip this on its head. Because for every big winner, there's always a loser. And today, the big loser was the very thing that had been acting as a hedge against this exact conflict.
Yep, British Petroleum, or BP. It dropped a sharp 3.54%. I mean, while the rest of the market is celebrating, big oil was getting hammered, completely missing out on the rally.
And yeah, no surprise here, BP is one of the absolute giants in oil and gas. Their whole world revolves around the price of crude.
And this right here, this just perfectly shows you how fragile these fear-based trades really are. You see, for weeks, energy stocks were the perfect portfolio hedge, but that whole trade was built on a foundation of fear. The moment the threat of immediate strikes disappeared, so did that speculative premium. And what did investors do? They aggressively locked in their profits before they vanished completely.
Okay, so we've got the simple trades down, right? Peace is good for travel, bad for oil. Easy enough. But now, let's look at a much more interesting winner. A company that kind of wins no matter what the daily headline says. Check this out. Palantir Technologies just rocketed almost 7% higher, closing above $160 on absolutely massive volume. This move is telling a totally different story than the rest of the market. And that story, well, it all comes down to their core business. Palantir isn't your granddad's defense company. They are a data analytics powerhouse for military and intelligence agencies. They're the ones who find the signal in all the noise.
So here's the kicker. While the rest of the market was rallying on the hope of de-escalation, Palantir was rallying because the underlying geopolitical world is still a chaotic, fractured place. On top of that, the Pentagon just designated its Maven AI platform as a program of record. That's code for a huge, sticky government contract. And this is what makes Palantir so different. They win whether we have a hot war with missiles or a messy information war with conflicting stories. In a world with rising tension, defense intelligence budgets just keep expanding, and that makes Palantir a true long-term winner.
All right, let's wrap all this up. You want to sound like you know exactly what happened in the market today when you talk to your team tomorrow? Here is your script, your morning huddle cheat sheet.
First up, for Norwegian, here's what you say. Norwegian jumping nearly 8% today is a textbook example of how heavily pressured consumer travel names will violently squeeze on any hint of geopolitical de-escalation. If we genuinely believe this 5-day strike delay holds, rotating some capital back into the travel and leisure sleeve could offer serious near-term alpha before the broader market catches on. Boom, it's a tactical play on de-escalation.
Okay, now for BP. The drop today is a huge warning sign. Here's the line. The 3.5% drop in BP is exactly why we can't get complacent with our energy hedges right now. The moment the White House signaled a delay in strikes, the oil premium evaporated. It proves that we need to actively manage our commodity exposure and take profits at the extremes, rather than just setting and forgetting it during this Hormuz standoff.
You see, you got to be active, not passive.
And finally, Palantir. This is the really smart take. Here it is. Did you see Palantir cross $160 today? It's fascinating, because while the rest of the market rallied on peace, Palantir rallied on the underlying chaos, and the Pentagon designating its Maven AI platform as a program of record. Even if kinetic strikes are temporarily delayed, the conflicting narratives between the US and Iran prove the information war is only escalating. That essentially locks in massive, sticky government contracts for defense tech. That's the long-term story right there.
And all of this whole wild day, it brings us to one final, really important question.
The market violently rallied today just on the rumor of a 5-day delay in military strikes. Do you trust this relief rally, or is the fog of war making equities too dangerous to trade right now? I really want to know what you think. Drop your take in the comments below.
And while you're there, make sure you subscribe to Market Fluency for your daily edge.